Okay, it's 6 o'clock. I'd like to call this month's meeting of the Water Commission to order. Start off with roll call. We have all present but Commissioner Haldeman, who notified us that he'd be absent, and he's still on company business today. Would you please join me in the Pledge of Allegiance? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, we have now citizens' comment period. We have one person who signed up. Rebecca, I can't pronounce your last name. I'll let you come up and introduce yourself and give your address. And you're limited to 3 minutes. I don't know if you've done this before. Okay, so you're limited to 3 minutes.
I'm going to talk fast.
Okay.
My name is Rebecca Sasseville, 89.
There you go.
Better? Rebecca Sasseville, 8914 Comanche Path. I have more questions than answers, so I don't have a great speech. I will talk very fast. I've gone to 3 meetings now to try to better understand the potential or the proposed water rates, and I have questions in very random order. So one of my questions regarding the rates is why? I'm trying to understand, I've gotten 3 different answers as to why we have the water rates. One was rates haven't been increased since 2015. A second was the mayor wanted it, and the third is infrastructure. None of these fiscally are tied to why my water rates need to be increased. If it's infrastructure, that's a general funding question, and when you look at the bigger picture as far as conservation, which is the mayor's initiative, he's talking about conservation, great concept. However, at the city level, when you look at the budget, for every tax dollar that's brought in from our property taxes, 70% is spent on personnel costs, either from city hall management or the police department. 70% of that goes to that. Conservation-wise, it's not making sense. And so when I look at the bigger picture and you're talking about 2018 being audited and you're starting to break out numbers, the bigger picture that I'm taking away with is that these rates are more to do a city revenue to cover an overall expense. And so to me, it comes across more like a backdoor property tax increase, which is a public referendum. I hope I am way off. I hope I'm missing lots of information, but I've tried to read. I've come to several meetings and I've listened, I've asked questions, and I'm still not getting the answers that paint a clear picture. The answers that I do get do not make me feel very comfortable with these water rates. And so I hope that there's one big piece of the puzzle that I alone am missing. And if you could clarify, that'd be great. And then lastly, from the proposals, I know you said you're going to come up with a new proposal or a couple different proposals. And when I broke it down number-wise, looking at if you assume that there's 40,000, it's the average number of users, or not users, but usage, it was almost an 18% increase. That seems high to me to punish the average person that has between 3/4 and an acre lot to have an 18% increase on a water bill. So maybe if there's a little bit of flexibility, instead of going in 10,000 increments, maybe go in 5,000 increments. I don't know. So I'm hoping maybe tonight you guys paint a clearer picture on the next round of water rates that you're proposing. Thank you.
Thank you.
Do I turn this off?
That's the only one we had signed up, so we'll close the citizen comment period now. I didn't say this earlier, but we're not allowed to respond to you during this talk, so, so. Okay, moving on. Number 5, business items. The first is A, approval of the minutes from August 27th and 24th. I'll first look for a motion concerning the minutes of August 27th.
Move to approve the minutes from August 27th as written.
I second.
Okay, I got a first and second to approve the minutes from August 27th. All in favor, say aye.
Aye.
Opposed? Motion carries. Now for the minutes for September 24th. Do I have a motion?
I'll move that we approve the minutes from September 24th, also as written.
I second.
Okay, I have a motion and a second to approve the minutes for September 24th as written. Any other discussion? All in favor?
Aye.
Opposed? Okay, motion carries. Moving on to item B, 5B, discussion reports updates from the Water Manager Monthly Activity Report.
Thank you. I don't have anything to add to the report. I do want to point out that we are using more water out of the Trinity now than the Edwards. We're coming out to the end of what we are able to pull or should be pulling from the Edwards. So you'll be seeing the trends switch. And that being said, if you have any questions for me.
So just a general interest question, I guess, not recommending any kind of changes to the report, but we have the rolling 13-month data. Are we archiving that? So for purpose of future water rate studies, can we go back and pull that for like a 5-year period?
Yeah, we have records.
All right, thank you.
Any other questions from my left? I don't have any questions either, so. Thank you.
Thank you.
Moving on to item 5B, number 2, discussion of items from the city council meeting. That was a pretty short discussion. I basically told the council that we weren't prepared to have a new water rate structure and asked for another month to do that this month. Also mentioned that Patricia Hartley gave a short presentation on water saver landscape design, and that we'll be looking to her and her committee to maybe provide some future educational opportunities for our residents. And that's really it. Any questions? Okay, moving on to now the water rate structure. First of all, at the last meeting, Commissioner Harshberger and I were appointed as a 2-member committee to work on a proposal. We worked with staff extensively, with Mrs. Kane, our financial manager or accountant director, Karen Ford, Kat, and Jacob. So we all met and worked hard, and I really appreciate everybody's help for doing this. Made a lot of progress, so we go to that presentation. Okay. Should I get the mouse? Okay, so I'm gonna start off, like I said, and then Commissioner Harshberger also we'll switch back and forth. So this is what a depth study we went into, like I said. First, I'll give you some background. The City Council's intent, which was covered on that special meeting on September the 10th. We'll review our current situation, which is review the water markets analysis, the company that we hired to do that work for us. Look at demand, water supply, the water company and infrastructure, financials, risk, and using the water market model, we develop our own analysis and our own thing. So we'll have some options to consider for the water rates, and we'll talk about the alternatives and recommend a decision criteria, and then discuss recommendations that we can present to City Council at the November meeting. Okay? So background, like I said, we had Water Markets do a study. back in late 18, that the results for that study was approved by City Council on August 1st, or went into effect August 1st. And then the special meeting on City Council had on September 2nd was to call those rates back. Yeah. How did we get all the way to the end? Did I push the wrong one? Sorry. What did I do wrong? Okay, am I doing this part? Yeah. No, I know, go back one, if that. Okay, that was it then, goes to the next one then. Okay, so, Water Markets, was retained back in November of 18, and this was the criteria that was given to them at that time. The cost of service, and be sure the revenue covered the expenses, had provided characteristics of the current rate structure, the customer types. We had two types basically. Look at fixed cost and variable expenses over a 5-year period. Water fund financial condition. Again, the water company is a standalone company from the city, so no tax money comes into the water fund. It's all income from here, and all the expenses for the water company are covered. So partial employee are brought over to the water company itself. We look at compatible billing systems and look at conservation incentives was the way we presented to them. So develop a model. So they developed a model that we could use, and that's what we did. We used that model, looked at everything that was in that model, and used it. So we didn't have to go back to Water Markets to incur any more expense with them. Okay. So key findings were that the current rate structure did not cover current expenses, did not cover expected capital projects over a 10-year period, basically discouraged or did not help in water conservation, for customers. We had a water fund balance that would deplete if we didn't do any changes by 2022. Will be depleted. So we need to do something. Okay. So these are the rates that we had. So we show 2020. That was the rates that we actually went into effect in August. The next column has the prior rates, the existing, and it shows on the far right the percent increase for each one of those. Okay, this is just for information that we that we started with. Okay. So again, we had the special city council meeting on September 10th to address the concerns of the citizens. There was a full crowd here. The consensus was by city council that it was too much, too fast, wrong time of year. The city council voted to roll back the rates to the pre-August levels and issue revised bills to customers. They did agree to retain the $2 increase of the base consumption charge, and then directed us, the Water Commission, to review the rate tiers and recommend adjustments to council for November. And the new rates will be taking effect in January of 2020. Okay, this is the one that, you want to pick it up? Yeah.
Okay, as I get started going on, there's a whole bunch of stuff in the presentation. We won't talk to all of it. A lot of it is there for you gentlemen to look at and as background, but certainly we'll refer to it if we have any questions. But we'll start off with what the committee inferred was the council's intent based upon their guidance to Water Markets and then based upon the statements from the special meeting. So the first thing that is in that intent is that we need to fully fund the water company separate from the general fund. The intent has been for the last 2 years to make that happen, and we're well down that road. In fact, it is, from accounting terms, it is separate at this point. There's separate funding. Now, obviously, expenses have to be allocated from personnel that do multiple roles. So there is an allocation that occurs, and the water company is charged for that share of salary and insurance and expenses along those lines. So, but the number one intent is to make sure the water company is fully funded separate from the general fund. Secondly, they stated that we need to maintain the existing quality, redundancy, and reliability. In other words, we shouldn't let it get worse. We should keep it where it's at. And then we need to maintain adequate financial reserves. We were told to use a 5-year planning horizon. The water market study actually goes out, I think it's close to 20 years, but the emphasis is on a planning horizon of 5 years and then focusing specifically on the next 2 years, because as we all know, as we get further out with the forecast, it becomes more and more uncertain. And then the intent is to maintain or increase conservation incentives, not to decrease them. Council would like to minimize the impact to low-volume users, but they also indicated an intent to roll back or delay the increase for mid-volume users. So that is our summary of what we started with as the guidance from council. So I'm going to go through, this is the part I won't talk to everything because a lot of it is not terribly significant, but I do want to hit a few points. So we tried to look at where are we right now? What is our current situation? So we've already talked about, we reviewed the water markets analysis, and then I'm going to talk a little bit about demand characteristics, a little bit about supply, a little bit about company infrastructure and where we stand there. We will linger briefly on financials since that's a key part of what we're trying to do with the rates. And then we'll go through some risks that we identified. These are risks that exist whether we do anything or not, but we should take them into account as we set our way forward. And then we'll talk briefly about the water markets model, specifically what are the assumptions and data that we updated so where it's a little bit different from water markets. Okay, so starting off with water markets analysis, the model that they used came from the University of North Carolina. It's a fairly standard model, but it is a simplified model from full economic analysis. The inputs are listed up there. I won't talk to all of them, but that's information that you have to put into the model in order to get output out of it. There are some key assumptions that are in the model. First of all, there's an inflation rate. So the expenses for the company are assumed to grow, and the users of the model have to determine what that rate is. So we'll get to that here in a bit. There is a demand price elasticity assumption, which means how much does consumption go down with increasing price? There is an assumption on average demand trends. So apart from the dollar effect, apart from cost, if people are putting in low flow toilets and better faucets and as technology improves, is there a trend towards reduced demand? So there's an assumption for that. Then there are assumptions on growth projections. So that's as the city grows and there's new homes and businesses built, there's an assumption for what percentage that increases. And then there's a small amount in there for the percent of uncollected bills. So all that has to be input into the model. Now the model itself is a linear model for future years. So it starts with the base year, and then all these assumptions have linear projections. So we need to keep in mind that the further out we go, the less reliable those linear projections are. There's also a single inflation rate for all expense categories. In reality, is insurance costs and other personnel categories are not one rate. So what was done was we looked at all of those values and came up with an average rate to use for the model, which you'll see as we look forward into it. And then finally, you have to put in your debt. What is your debt service obligations? And those are known, so we did update that for based on fiscal year or audited 2019 data and the 2020 budget. But going forward, the water markets analysis did identify significant revenue shortfall, and the chairman's already talked about that. But in essence, we're underfunding the expenses by about 16%. So water markets then recommended significant rate increases over the first 2 years or the next 2 years. All right, looking at demand characteristics then, the city has been growing at a rate of about 2% new connections, or about 30 new connections per year. However, we did update that assumption because we're nearing build-out. So that growth rate is unlikely to continue beyond 2020. Non-residential growth, in other words, commercial use, is highly uncertain. So we expect it to grow, but we don't know what the amount will be. Now, the one area I want to talk most about is peak demand fluctuations. So we went back and looked through the data, and as you would expect, our water usage is highly seasonal. So over the period from 2013 to 2018, the average summer peak was about 52.5 million gallons, and the off-peak value was about 14.7 million gallons. That's at the rate at which it's used per month. So that gives us about 113% difference from the average annual use to the peak, or said another way, the peak to minimum difference is about 257%. So there's significant impact to the water company with peak load demand. We have to build, and the infrastructure has to be maintained to support peak load. All right, it is also highly sensitive to seasonal rainfall. Going back and looking at data, the one I'll talk about, for example, is fiscal year 2019 ended at 2.4 million gallons below the fiscal year 2018 number, and that was a 12% reduction, and the model had forecast a 2% growth. So we need to keep in mind with the rates that there's risk in the sensitivity to demand that we have with our water company. All right, this part I'm not going to get a whole lot into, other than to say that all utilities, but water included, are essentially public goods, meaning that once we build the water, it's there. So you turn on the faucet, it runs. So from a consumer standpoint, it is normal to see demand higher than we think we should have to pay for it once it's built. Governmental terms, that's why we have a certificate of convenience and necessity. That's why utilities operate with essentially monopoly authority within their area. It is to deal with that nature of business. And then what that leads to is the city council's role for us as our elected representatives is to determine what the rates are based upon citizen comment and input. What are we willing to bear? So that is just part of the nature of being a utility. All right. Price elasticity is not linear. The high volume users and the commercial users are more sensitive, I won't say highly, but they're more sensitive to price than the low volume users who are primarily using water for sanitation and health and drinking. So the low volume users don't change their consumption based upon price compared to the high volume users, but the model uses one rate for all. So that's an important thing to keep in mind. All right, supply I won't talk about specifically. You can look in detail, but the bottom line on our supply is it's diversified and it's stable, and we have governmental entities that manage it. We do pay differently for Edwards Water, and that's kind of a pay ahead of time, and we're subject to their restrictions for various drought stages, whereas the Trinity, we pay a fee based upon how much we use. So there's slightly different structures, but we have a good supply. The water company itself, our supply is highly resilient, and the company's infrastructure is resilient, and we have a high-quality system that meets all requirements to be rated as A+. Our pumping infrastructure can meet peak demand, and we have reserve capability to handle if we should have an unplanned outage of one station. Timber Rose is indeed in need of updates. That's our oldest one, and that's been discussed in this commission many times. Our elevated storage is quite sufficient to maintain pressures even under peak demand. And our distribution system is generally healthy, but we do have some older water lines in certain parts of the city, and the older they get, the more likely they are to have issues. There is approved projects, but they're not funded, so they're forecast to deal with that. Our staffing needs within the water company are all met, so everyone's fully qualified to do their job. But the most significant part of this is just that the water company is self-funded, and that's why we find ourselves where we are. In the past, that has not been true. So on the financials, as was mentioned earlier, the last rate increase was in fiscal year 2015. That's a fact. If we look at revenues versus expenses and we include the planned water line projects, then we find our expenses are 16% short of what we would require to cover our expenses. It's also interesting to note that from 2015, if we used a 3% inflation rate and had to increase it every year, we'd have covered that 16%. So it's not an unusual difference that we're talking about. In fiscal year 2018, $168,000 was transferred from the general fund to the water company, which means the city taxpayers subsidized water company to the tune of $168,000. So part of what we're trying to do is end that general fund subsidy to the water company. The 2020 budget did defer those planned water line projects. They're currently not funded. So that gave us a little bit of room in looking at the options. So the debt that was in the previous model is not there for 1 year, but it does need to kick in eventually, as we talked about. The fund balance itself is below target. By target, I mean what's accepted and normal within the financial community for how big your reserves need to be. And then the chairman already mentioned that the council approved that $2 base increase. That I will say that that $2 base increase is sufficient to cover water company expenses if we don't fund the CIP projects. So if we were to just accept the infrastructure where it is for a few more years, that base usage has covered those expenses. But I believe that there's an issue coming if we don't address the infrastructure. All right, so just really quickly, our supply risk is low. We don't see any immediate threats. The demand risk is moderate just because the price elasticity is somewhat unknown. And our seasonal demand makes it uncertain how much we'll get. Infrastructure risk is low. We have pretty good infrastructure. The risk from the old lines is localized. The city has a pretty good distribution system. Obviously, that risk grows as we continue forward in time. Financial risk. As a standalone water company, our revenues must cover operating expenses. They must provide capital for future projects, and we must maintain an adequate reserve. Those are the things that we're required to do. The primary way we address financial risk is through our fund reserve. So that reserve fund should cover, actually it has to cover 12 months of debt service. And then the recommendation is that it should cover 12 months of operating expenses. Our current reserve is below that threshold. Our ability to service debt is somewhat limited. It's a small company. So based on fiscal 2018 data, we have a debt ratio of about 28%, which is fairly typical. But if we were to fund the CIP projects at their planned rate, our debt ratio would grow to close to 50%. So what that shows us is the financial risk is very sensitive to the amount and timing of capital expenditures, and we need to do a good job of forecasting them, planning them, and executing them in a timely manner so we don't have too many of them at once. And then the water market study used projected CIP. They found the reserves significantly below requirements, exhausting our reserves within 3 years. So the near-term financial risk is moderate if we do nothing. The mid and long-term risk we assess as high. I mean, it won't take too long to run into a problem if we don't make changes. All right, intergovernmental relationship risk is something the mayor talked about. The risk is assessed as low, but it does stem from the fact that we have a very high per capita consumption, as expected with larger lots. Environmental risk is also low. Opportunity risk we assessed as low, but that covers in all those things like if we have our rates too high, then that's seen as a tax. That's seen as a discouragement for real estate activity. It could be a deterrent to commercial businesses wanting to come and set up in Garden Ridge. So those are what we're referring to with opportunity risk. Again, we see it as low at this time. Okay, so to try to keep this moving, because the chairman's already talked about meeting with the staff, let's just quickly look at the things that we updated. So we changed the model to include the $2 increase in the base rate that's already there. We updated the volume consumption numbers based on 2019 data. So we updated that data that shows the fact that we used a little bit less. We also updated the number of water accounts to make sure that was correct in the data. So we need to start at a known point. The debt service was updated to reflect our current debt schedule. I mean, there was a lot of debate about the future CIP projects. As a committee, we felt we had to put them in there because that relates to our future financial risk. And then we had to estimate an amortization schedule because there isn't one. They're not yet funded. So we just used the standard 30-year amortization. So obviously, when we actually do this, we'll structure the debt a lot better than just a straight flat 30-year amortization. There was a dissenting opinion on this. The city accountant favored using only the current debt and the 2020 budget. So after lots of discussion, we decided to go ahead and include that. Otherwise, there's, we could make the case for doing nothing for a year, and maybe even 2 years, but every year we do that increases the future risk to our capital, because we can't delay these projects too long. We're small, we need to do a little bit at a time and not have a big chunk all at once. Okay, so key changes. We took out the Edwards and Trinity fees because they're pass-throughs. So our customers pay those fees directly. We have both revenue from that and an expense. We just took them out of the model. We updated the expenses based on 2020 approved budget numbers. We adjusted the fund balance to match the amended 2019 results. So it's as close as we could get it. There's a few, I think it's about $2,000 difference between the audited results and the budgeted results, just based upon things change over time. So they're really close though. We did adjust the minimum reserve fund from the previous model to indicate 1.5 million, which is an increase slightly, but it's less than the 1.6 million that was recommended by Water Markets. We also decided to leave the reserve to be equivalent to 12 months of debt service and 9 months of operating expenses. Again, based on standard accounting rules for municipalities, we would prefer to have a 12-12, 12 months of debt service, 12 months of operating expenses. Doing that would require an additional $250,000 to be added to the reserve fund. So given citizen concerns with where we already are in rates, we as a committee determined to leave the 12-9 structure for now, but we did increase the assumption that we needed to build reserves at a rate of $25,000 per year, so that over 10 years we can approach that 12-12 figure. We believe that was a very conservative assumption to make, but it does add a little financial risk because your reserve is less than what you expected to have. All right, growth was reduced from 2% to 0.5%. That is to account, that matches for the next 2 years the permitted growth that we expect, but it over predicts outside of those 2 years. So keep that in mind as you look at the numbers. We changed the operating expenses inflation rate to 3.27%. The old model had 2%, so this is an increase. Now, they range from 12% in some categories to less than 2% in others. This 3.27% is the average value that gives the equivalent increase for the next year that was budgeted. And then we just use that average value going forward. We left the 1% reduction in demand for new technologies. We simply don't have any data to know whether that's good or bad, so we felt that was a conservative assumption. We also retained the price elasticity assumption of a 2% reduction in demand for every 10% increase in rates. We have no data to support that, but we again believe that number to be customary and conservative, so we left it as it was. All right, so after reviewing all that data, we determined that the Water Markets model with those updates was actually our best available projection. We weren't going to be able to pull anything else that was better in the time that we had to work with. I would point out that there are still significant uncertainties and gaps. As a small city, the way we've collected data doesn't meet what a statistician would look forward to as using data analytics completely effectively. So as we move forward, we should continue to work with staff to refine what our data requirements are. Things like, what is our average consumer? What is those bills at different phases of the year? There's things that we can pull, but we just don't have the time to do it right now. So those are gaps that are out there. But our committee assumed the model's validity for 2020 and 2021, and we consider the model to be reasonable for planning through 2024, but do caution the commission that the further out you go, the greater that uncertainty. And as a result, we want to recommend that our commission consider adopting an annual review process for this instead of waiting 6 years like we did this time, and just get in the habit of doing this regularly and make sure we stay on track. All right. So with that, anytime you're tired of hearing me talk, you can jump in. We looked at a whole bunch of rate scenarios with and without the CIP projects. And our goal was to find at least 3 that would meet the city council's intent and do it in different ways. Now, the city council's intent, there were some things that we considered essential. In other words, they won't get approved if we don't do these things. It needed to be revenue neutral. We are not trying to generate additional taxes or anything like that. So we need to fully fund the water company, but it's revenue neutral. Now, because there's lots of fluctuations, we had to define what revenue neutral was. So we looked at it and we called it 1% over project. So from 0 to 1% over projected expenses for any 1 year. So not more than $20,000 of revenue in any projection year and not less than 0 net, we would call revenue neutral. We did consider the need to build our reserves toward 12 and 12. We've already talked about that. We considered emphasizing these next 2 years as essential. And then we considered the rate structure that needs to, for the conservation incentives, the rate structure needs to increase charges as volume usage increases. But how much is kind of the whole essence of these options. So we need to maintain the conservation incentive. We don't want it to go down, but we don't necessarily need it to go up as much as was forecast, if that makes sense. So that's where the options differ. They differ in how much impact is there to the low volume users, and they differ in how much we roll back or delay the increase to the mid volume users. So you'll see that in the options. Those are the differences. They all meet the top part, but they meet the bottom two in different amounts depending on each option. All right, so the first option is what the city council actually told us to do. So we prioritized meeting their intent. In other words, we retained the $2 increase, which takes it up to $25. That's already been approved. And then tiers 1 through 3, so the low volume users, and 8 and above are unchanged from the water market's rates in this study. Tiers 4 through 7 are what we called the mid-tier, and they still increase, but at a lower and more graduated rate than what was in the water market study. All tiers reflect a 3% growth from 2022 and beyond to cover the inflation. So that's one option. And I should also point out that that's pretty much the option that former Chair Heyer presented to us last month. So there are minor differences based upon the updated budget, but that's essentially the option he presented. Option 2 then was to look at it and doing a more uniform spread. So we have a 14% increase across rate categories for the first year, 2020, and a 16% increase across categories for 2021. This option still maintains our conservation incentive because there's already a significant incentive built into the rates as they exist. We felt this option emphasizes equity because we spread out that 16% needed increase across all rate classes. To do it and make it work, the base rate had to increase a further $1 in the second year, which means the base rate increase total is 13%. So it's still less than the increase based upon volume, but it's more of an increase than in option 1. All volume tiers, I already said that, so never mind. Okay, so that's the second option that we looked at. And then option 3 that meets the intent is adding a category for commercial rates. Currently, our commercial customers pay residential inside rates. So this option prioritizes equity in that we're no longer subsidized by the general fund. So residential outside, it was a higher rate initially because taxes were subsidizing the water company and they didn't pay taxes. That's no longer true. So in option 3, residential rates would move to all one rate and we would add commercial rates, which would be pretty much the same as the residential outside. So it still has the $2 increase that council already approved. And you can read there that non-residential, non-governmental users come into the commercial category and residential tiers get adjusted as needed to meet budget requirements and still be revenue neutral. And that was a 9% increase in 2020 and a 16% increase in 2021. So under this option, the residential customers would increase a little bit less than they do under the current rate structure. I'm sorry, the water market rate structure. Finally, again, all tiers reflect the 3% increase in inflation rate beyond 2022. There's always an option, I don't put it up there, but sorry, it won't go backwards, so I'll come back. You can back it up one slide. There's always an option to do nothing, and there's always the option to use the water markets study that was already done and adopt those rates. So we'll see those in the analysis, but we didn't list them as a course of action. All right, so for us, what we need to do then as we look at these options is agree on what decision criteria we want to use. These are just suggested, all right? Chairman Valdez and I sat around and discussed what we thought criteria should be. So by all means, as we go forward, we're looking for your input on what we think we should recommend to council. And keep in mind, they'll do what they think is their best decision criteria. So this was just our opinion. All right, but what we looked at was ranking each option with a score of 1 to 5, where 1 means it's least effective and 5 means is most effective, against the criteria you see. Minimizing impact to low-volume users, rollback or delay increase to mid-volume, minimizing company financial risk, equity, meaning that we increase it evenly, conservation incentives, meaning that the increasing marginal rates increase with volume so that people who use more pay more. And then we added one for economic efficiency. So what this is, and this is the deal with the peak demand problem. In essence, we call it economically efficient if the base rate customers are covering their off-peak share. So based upon the numbers from the last couple of years, that means they should pay about 28% share of the fixed expenses, including debt service, which works out to about $374,000 per year. That basically represents how big the company would need to be if we didn't have peak demand. And then the second bullet there says the base rate plus the lower 2 tiers, so those are our low volume users, but that's about 82% of the total, that those users should cover the off-peak average share of expenses. So that's the roughly 40,000 gallons that was mentioned earlier. That those folks would cover 65% of the variable expenses, which would then total, so if the first 2 bullets together would total $631,000 per year if they were funding that much. And then finally, the higher block tiers would cover the remaining 35% of variable expenses and a 72% peak share for demand, which would be a total of about 109 or 1,000,001 per year in total revenue, or 1,099,000, if that makes sense. Now, I will say that none of the options do this. They do it to different extents. It's not really realistic to think we'll ever get there. I don't think any utility operates at pure economic efficiency just by nature of the business. But the closer you get, the better it is from an economic standpoint. So those were the criteria that we used. Did I go backwards? All right. So again, you've got them in your packets, but this is option 1. So these are the rates that would exist if we stuck with what the city council recommended themselves. Again, it's hard to read all those numbers. I would focus strictly on the first 2 columns, actually first 3, the existing rates and what we would recommend that they would increase to in 2020, so in January. And then you can look at 2021 to get an idea of the increase after that. This option keeps residential inside and residential outside as our 2 categories. Summarizing what was in that previous slide, the number circled up there is what the reserve would be predicted to be by the model using these prices. And you can see that as we go forward, that line stays above 0, and except for 2024 is below the 1% threshold. So we determined this to be a revenue neutral course of action. You can also see in the upper right-hand corner, there's no visible difference between the minimum threshold for the reserves and the actual revenue, except out at 2024, you can kind of start to see that little dotted line, which represents the minimum threshold. So we pretty much follow right along with our requirements based on the model. In the chart below that on the right, you can kind of get a sense for what's the low demand users pay, which is the darker color, versus the higher demand users. And I would just point out that it breaks out a little bit under 500,000, so it's a little bit less than what I indicated for peak efficiency, but it's still pretty close. It's still pretty good. All right. So when we scored it with our criteria, then we look at impact to low volume users, and we gave that the highest score because there's no added charges other than what the council's already put on there. For the mid users, we gave that also the highest score because it rolls it back from the mid users compared to the rates that were proposed in August. We gave it a moderate score for financial risk because it relies on a higher share of revenue from our more demand-sensitive customers. So it's harder to predict what that actual revenue would be. Equity, we gave it the lowest score because the rate increases are not shared equally across all categories. And conservation incentives, we put it just slightly less than what water market was. The water market obviously prioritized conservation incentives. That's the steepest increase in the rate ladder. This one's almost there. It's a little bit less, so we gave it a 4. And it's a mid-range on economic efficiency. The base and lower tiers do pay an increased share of peak costs. So when you add all that up, we got a score of 21. All right, option 2. As you look at all I keep wanting to think that that's a pointer and it's not, so let me back up. I'll let you wander on that there for just a minute. Don't shut your eyes.
This button is the pointer,
Okay, gotcha.
and then forward, backwards.
Thank you. You have to help the driver figure out what he's doing. All right, so again, it's a whole mess of numbers. What I want to point out is in fiscal year 2021, on the monthly base consumption charge, you see the increase to $26. The numbers that are in the volume categories are lower than the water markets and lower than option 1 in all cases, but they still increase. So the same sort of charts. Again, it is revenue neutral up there at the top. We do have a slight negative value for 2021. As we played with trying to make that go away, there was simply no easy way to do it without overdoing the revenue in the first year. So we considered that 10,000 on the plus side and 1,000 on the minus side is still a net 9,000. So we felt it still met revenue neutral criteria. In the out years, it increases a lot further, however. You'll notice in that chart on the right middle, the dark blue share is a little bit smaller than the one before, meaning the low volume customers are paying a little bit less of their share. So again, scoring it, impact to low volume users, this got a 1 because that's the highest impact to low volume users. Mid volume a 3. The rates are reduced compared to water market, but they're not reduced as much as they are in option 1. Financial risk, we gave it the highest score because more of the revenue is coming from the low volume users and that is less demand sensitive. Equity, we gave it the highest score because that increase is spread across all tiers roughly equally. Conservation incentives, we gave it an average score. Each tier does increase, so we do maintain the incentives, but they do not increase as rapidly as the other options. Economic efficiency actually went down though because the lower tiers are paying an increased share of their peak costs. So that score came out to be 19. Now, before I move on, we equally weighted everything, and we're not sure that's the right answer. So that's up for your discussion as well later as to which one of these you want to call more than another. 2 points difference is not terribly significant. So both of these come out pretty usable. All right, the option to add commercial rates is shown here. So basically what was the residential outside becomes commercial. Oh, residential outside's still there? Okay. So residential outside is still there because it'll take a little bit longer to make that happen. We couldn't do that next year. That is about 83 customers, I believe. So it's a small number of folks. Not they're not important, but we just couldn't make it happen in the time we had.
I will say, add at this point that we just took the outside rate as a standard. I didn't have we have not done any research on what other cities do with their commercial, so I'm prepared to do this, but we just want to show it.
So as you see the projections, it's still essentially revenue neutral, but towards the out years, it starts to increase more than the others. The share from peak user or from low volume users towards peak is about the same. But when we scored this one, we gave it the lowest score for low volume users for reasons I already talked about, middle score for mid volume users, but we gave it the lowest score for risk, primarily because of what the chairman just mentioned. It's going to take a while to move the residential outside. We have no way to know if those residential outside rates would be appropriate for commercial, and that's a demand-sensitive area, so we don't know what that would do to our revenue either. So we gave that the lowest score in terms of financial risk. Equity, however, we think is pretty good, all right? We're treating all the residential customers eventually the same, and the business customers then pay a slightly increased share compared to residents. Conservation incentives, we still have each tier increasing, so we call that average, and economic efficiency is also average. But that came up with a total score of 16, so it's the lowest one of the three. There's your null option, so if we stuck with the water markets year 1 and year 2 rates, so you've all seen this before, so I'm not going to go through it, but this is what was approved essentially in August, but with updated debt and other information in the revenue projections. So the revenue projections with the water market model, I'll just point out, is no longer revenue neutral with the new budget information in there. So it produces significantly more than 1% additional revenue. But that is always an option. When you score the water market, it comes out pretty high as well, primarily because of its emphasis on efficiency and conservation. However, it's debatable, since it's not revenue neutral, if this one should even be included.
The rates, though, are the year 1 and year 2 rates, so
Correct,
it's not that, yeah, the 2021 would be the ones that they were approved in August, actually.
correct. And that's important for us to remember. Those out year, more than 20, they're just going to approve rates for 2020. That's what they're going to do. They can always change them the following year. Those projections are simply to show what the model does for future use, because we don't want to build a hole now that we can't dig out of later, basically. All right, I will let you take over. I'm done talking.
I added some more. Since I added more charts since Kevin put this together. So this, to make it easier, I put this chart to show all 4 options together. You can see the rates in one place, and I have to go 4 different places. So, okay. The next chart actually shows what the billing would be. So all the way in 5,000 gallon increments, what, you know, all the way up to 100,000, what they would be for the current rate and for the option 1, 2, 3. You'll see in some cases at the lower, probably below 45,000, that's pretty more neutral. You'll see the different changes that goes above that. Because it gives you a numerical value to look at that way. And then I did a graph. You can see the rate increase as you go. Now this is what the water part of that bill would be. You can see how it goes up. And I just put the numbers options with the current. You'll see that again, below 45,000 or so, it's hard to see. So I highlight, this section here in the square here, I blew up. So you can see a little bit more of the defined difference between those. And I only put option 1 and 2 in here, so you can see it better. And like,
On the previous chart, what was current was that what we're paying right now?
current, yes.
Okay.
Or what the
Thank
bill is
you.
currently, yes, sir. That includes the $2, where am I going? I went
The
back.
$2 base, I saw
Yeah.
that.
Yeah, includes the $2 base increase. So again, so I just expanded there for under 45,000 gallons used, so you can see the difference in the lines. The option 1, up to about 30,000 is the same for the current and that, and option 2 goes up a little bit increment because it's a flat increase percentage-wise. This would be if we use, looking ahead at 2021, this is what it would be then. It just opens it up further out as you go further out. Okay? Now, I just want to show if the city had increased rates 3% per year since, we haven't increased rates since 2015. So if we increased the rates in 2016, 3%, in 17, 3%, and so on, The increase to date would be 15.9%. So just to kind of show you an equivalent, what do we, if we had done something moderate over the last 5 years, this is what would be, 16%. Okay? So on this last chart here, I have the four options again, but then I added a percentage column, and the percentage bay is what the increase is over the current rate. Any questions at this point?
So, option 2 and 3, they have that dollar going on the base year, right? Right, 2021.
All four options have the 25 increase, the base rate.
But we're talking option 2 and 3 going to $26 in 2021, is that correct?
That's, again, that's an estimate, we have to look, that's why we're proposing, do we do it every year? That way we can look at that budget, the
Okay.
budget for next year, and adjust the numbers again.
Okay,
Also with usage, because we know usage could drastically change.
So
We're
I-
built out with meters next year, we think, so that's gonna affect the change in growth of meters.
maybe I'm wrong. I was under the assumption that the numbers we looked at on those charts were with the $1
They were
increase,
with,
correct?
yes,
Okay.
yeah. But this is only for 2020, so.
Right.
I don't have an equivalent chart for 2021, just because, again, it's just looking ahead, it's not necessarily something we would do, it's just, what we need to do.
So we account for what we needed to, I forget the number, Commissioner Hartsburg, you briefed the number that $1 accounted for. What was that, a percentage? It was like 3%, or was it 1% that it accounted for? Is that, I guess my question is, in these numbers that you know, great numbers, the 14%, the 9%, is that accounted for in 2021 as far as with growth? What we would
2021
need?
will have another, for option 2, it would have a 16% increase roughly
Okay.
for an option 2. Option 3, again, it all depends on how we really put the commercials in. The commercial,
Right.
and that's really an unknown where we go. That's just, again, just to kind of show the potential
Sure.
that it could have a positive impact on our residents, but, and it's something we'll ask the city council to ask us to look at for the next year.
Yes, sir.
But just to make sure you answered the question, if you did include 2021, yes, that $1 increase from $25 to $26 would represent 13% increase for that
Yeah,
category.
Yeah.
13%.
Yeah.
Okay. Thanks.
So again, this is, we're at the point now for additional discussion. You know, we're open to any other questions the commissioners may have. Of course, option 1 and 4 score equally, because the criteria are based equally, you know. Option 1 is favored because the financial risk is given more weight. Option 2 is favored if the financial risk and equity given are given more weight. And we're saying that we should consider deferring option 3 for 2021, just because we don't have enough data at this point to say that's the right way to do it. Okay. So at this point, any discussions, questions? You want to go back and see anything else?
I did have a few questions. I wrote some stuff down as I
Sure,
was
go
going there. We were early on in the assumptions, and I'm sorry for going way back, but
That's okay.
hopefully you guys remember. We talked about the Timber Rose pump station needing to be fixed, but you still had an infrastructure on low. So is that because Timber Rose is already in the CIP, or?
It is in the planned projects. I think it might even be budgeted for Temper Rose. Then we-
It would be, I believe it's in the impact fees. Okay, it would be in the water master plan, and I believe that was to be taken care of through impact fees.
So, but the bottom
it's
line is,
covered, then
there
it's-
is a plan to cover that already, but the
Okay.
reason it's assessed as low is if it were to fail tomorrow, if it were to fail tomorrow, we have enough redundancy in the system to handle it, basically. So we could lose one pumping station and still meet customer demand. Lose the second
it.
one, we start having an issue. But
Okay, thank you, sir. The other stuff, just because I'm new and I don't know, but what is the reserve, what is the reserve for? Why is that driven to a 12-12? It seems like a large reserve, but,
So, again, I'll ask Nancy to jump in and correct me if I get this part wrong as far as any of the legalities, but we need to have a reserve to cover 12 months' worth of our debt service. So if something happens, we need to make sure to maintain our bond ratings and everything else, that we have a reserve that can do that. Customarily, governments choose between 6 months, 9 months, or 12 months for operating expense reserve. So that's a choice that we can make. The recommendation, being a small city, is the favor of the 12 months, simply because we don't have a whole lot of flexibility. 12 months for us is a pretty small number. So
right,
a
we're
major
referencing
outage.
operating costs, but I assume that's for unforeseen circumstances and
Correct.
repairs. Okay,
So if we were to have a major failure somewhere, and we had to go out and spend a large amount of money, we have that reserve on hand, and we don't have to raise taxes and things. It's to cover contingencies.
that's what I thought. I
But
just wanted to make
But
sure.
the amount is up for discussion, right? That was a big part of our discussions with the city, was do we do 9 months or 12 months? So let me ask Nancy to throw in whatever she needs to.
Our reserves, we need to be able to guarantee that we can pay our debt, our upcoming annual debt. We need to be able to have expenses to operate equivalent to a year's operational expenses. And then also the reserve would be used for those unforeseen catastrophic type emergencies. If we needed to go in and pull a well or so, that you're talking, that could potentially be 50, 60 plus $1,000.
Karen,
Is
would
there
you
anything
come up
else
here?
to add, Karen?
Can you-
It's also because we need to have funds there because our water usage is very seasonal. So I will draw on that and draw on it and draw on it for about 8 months. And then about 4 months, we'll recoup that money. But I have to have that working balance there, or we wouldn't be able to make payroll, potentially.
Did we do any numbers on the number of mid-tier versus low-tier? Did I miss that slide? Like, did we do that?
Do we do the count?
Right,
No, we didn't show it here. I do have the data.
okay.
Um,
Mid-tier folks and
Yeah.
low-tier, because that's interesting to me as far as how many people we'd impact, you know, with the increase.
Yeah, I have it here that.
So while the chairman's looking that up, one of the issues, we can estimate the number of folks, but the data that we have is based upon consumption and number of bills. So we know how many bills met certain criteria. That doesn't necessarily translate to the person.
Yeah.
So that's where the data gap comes in. We can't really say this is our average customer and track them throughout the year. What we can do is track the bills. So he'll be able to give you a pretty good idea of what the number is, but you have to take it with a little bit of a grain of salt, because it's not, you know, people's usage changes a lot during the course of the year.
Sure.
Just like Commissioner Hersberg said, the data we have is on a 12-month basis. So the majority of the users are in the 35,000 or below.
Okay.
And then the next 4 tiers are in the middle range, and the top 3 tiers are the elite, you know. These numbers are bills, number of bills in the 12-month period by
Okay.
tier.
Can you go back to the recommendation slide? Yeah, that was the one I was looking for. Thank you. From what your research, when you were working on all this, did you pick to score each category neutrally or have all the categories the same? What was your logic behind that? Or did you think that perhaps one of them should have been weighted more, just from the research you did?
So I don't know if I want to call it the research that we did. It's just the discussions and opinions and back and forth. We put them all equal because we think that's part of what we need from this body is to decide where you all lie. But my personal opinion as we were going through it is I would like, given that we're here in the first place because of what happened in August, moving forward, I feel like we should be recommending to council that the equity criteria is the highest weighted. But we did not weight it that way in our recommendation because we need your input on that. And I should add, financial risk needs to be weighted as well, because we wouldn't be here at all if we weren't trying to have an independent water company. So managing that risk is essential. So I think those two areas are where I would come down as being the most important. But that's obviously very driven by opinions. We did try to look at some other benchmark data, but it was very, very difficult to pull out because every city out there they're accounting for this differently. So we used what Water Markets had, and we used what one of the councilmen had provided. And I know the chairman looked at SAWS with a little bit of depth, but we can't really call it a benchmark. We didn't have enough data to do it.
I'm sorry, were you saying that, I might have missed part of that, but you did do the comparison to other neighboring cities and everything, but this is driven by expenses, right? And debt payments and
It is
everything.
primarily driven
okay.
by expenses. The model is entirely driven by expenses. The issue came about in making a recommendation. You don't want to put ourselves too far above market. That is an issue. We're not. We're right in the middle of it. But we don't have good data to show you because the other cities they all track it differently based on meter size and based upon their base fees. And SAWS is about the only one that had a calculator out there that you could just go do what ifs on. New Braunfels is currently under discussion for changing their rates as well. So, I mean, we looked at their discussion, but we're pretty unique in the way our company is structured and our demographic and our water usage patterns. So there's only so much that we could do with the comparisons at this time.
One thing is noticeable is that most other cities top out at about 50,000 gallons. The rate, that's where it ends. It doesn't go any higher because most their consumers usually below that because they're smaller lots. So ours tiers up all the way up to 95,000. So that's one big difference. So the comparison is hard to do. There's a lot of hidden charges that the other cities do that it's not easy to find. So I did find an article that SAWS had, and they're considerably higher than what we have for bills.
So your best comparison is we're right in the ballpark?
Yeah.
Okay.
But again, like you said, it's based on our expenses, our debt, you know.
So what's our goal tonight?
Goal is to recommend one option,
Okay.
and then to go forward. But I would also, in the process, present the other options to city council as well. Either at least one other option,
Okay.
and let them consider. But we at least have to recommend one way to go.
Okay.
For me personally, I like the idea of deferring option 3 just because the commercial rates. So I think that one can be taken off the table, and based on the meeting in September, I'm not sure we would want to go option 4 and keep what we had before. I don't think anybody wants to go through that again. So that sort of narrows it down there to options 1 and 2.
So basically, the risk falls on consumer or the water company, is what I'm looking at. You know, the greater risk. I mean, from what you guys have done, you know, you guys have done an awesome job with this. Thank you for all these numbers and that number crunching. That's not my superpower for sure. So thank you all for all that work. You know, I'm looking at the 5s. You know, I'm looking at the 5s in your rating, and I think you're right on with those. You know, and the 3 and the 1, they just kind of switch places versus option 1 versus option 2. You did a great job coming in right at what the city council asked as far as, you know, a 0 to 1%, so it's right there. Both of these meet that. The big difference, I guess, in the 2 is the conservation as well. You know, that's conservation incentive, which we do want our folks to be conserving our water.
But we do need to keep in mind that both of those options still retain, neither one of them is a reduction in the conservation incentive. It's still there. It still has
Yeah,
an upward rate ladder. It's just a matter of how steep that rate ladder is.
for usage.
And both those options reduce the impact on the mid-volume users. So it really comes down to, do we take a increase in the low-volume users where a small increase brings in a lot of revenue? Or do we leave a steeper ladder, right, and take a little bit more from the top end, which is more demand sensitive? I mean, it really does come down to there. From economic efficiency standpoint, you'd rather take it from the top tiers. But given where we're at and how we got here, I don't know if that's the best option. That's why, me personally, where I start out with this is favoring equity for at least 2020 rates is the way to go. But as the chairman showed you, for 2020, that generates more revenue than option 1. So it's a small difference, but it's there. So whether we equally share the burden or whether we stick with the recommendation for just focusing on mid-tier, either way, we're going to be coming back next year.
Sure.
Right, this job is not going to be finished. We need better data. We need more comparisons. We need more time to think it through. So that's, even though option 2 scored a little bit lower,
Yeah.
I still favor it simply because I think it moves the ball forward in the most acceptable manner to the most people, just to equally share the increases necessary. So that's my input.
Thank you for your input, sir. And if I'm going with my gut, I was kind of trending there as we went through all of them as well, looking at, like you said, the equity and the equal share of what we all will do. And for the people, I think it'll be a great option as well. So that's where I'm trending as well.
Mr. Miller?
Yes, sir. Just one more question. So the lowest tier, the tier 1, what does that on the, on this chart, for example, where does that fall for gallons per month? Just out of curiosity. I was just trying to figure out the net impact to people. It looks like I don't think it'd be more than $5 a month. I'm trying to find it.
Correct. You see, it's from 240 for 1,000 gallons to 274, so 34 cents for 1,000 gallons.
Okay, so when we talk about the low, that's the top 2 tiers on this thing.
That's so
Okay.
the first tier, so once you pass 25,000 gallons, it's, for 10,000 gallons, it's what, $3.40? Is that right?
So option 1 versus option 2 is
Yeah.
50
Yeah.
cents or so.
And then you go a little bit more on,
Okay.
yeah, so 56 cents per 1,000 gallons for our tier 2, 15,000 gallons to 25,000 gallons. So that's why when you do the graph, now when you see very little difference at the bottom down here.
All right, I'm good on all my information. I think,
Yeah.
let's go ahead and make some recommendations, but I think the first, you had 2 points in here. If I were to go back a little bit, do we need to make a recommendation for an annual review process? Is that an ad? Is that a motion we
Yeah, we
need to
should.
make?
Yeah.
Okay.
So we'll do two, I would do one motion for which rate, and a second motion for, that we were, recommend an annual review. And now that we have this spreadsheet, it'd be real easy next October to get the fiscal year 2020 usage, get the budget for 2021 in there, the depth, everything will be real easy to incorporate into the spreadsheet. And so it wouldn't take long to regenerate that for next year. But I think we ought to do it every year, whether there's an increase or not, even if it's a minor one. We need to stay on top of it. We can't let it go 5 years, especially when we're a standalone company.
Well, that's pretty easy. I think I can make a motion, make a recommendation to review the water rates annually.
I second that motion.
Okay, so I have a motion and a second to review water rates annually. All in favor?
Aye.
Opposed? Motion passes. Are we ready to make a motion on the which rate option?
All right.
Who's ready to do that?
I make a motion that we adopt option 2 and recommend it to the city council.
I'll second that motion.
Okay, have a motion and a second to recommend option 2, which is a straight percent increase to water rates, 14%. Any other discussion?
Do we need to include in there, in the recommendation that we would present option 1 as well? Or do we need to address the decision criteria? Are we content with that before we vote?
I refer to city administrator.
I thought we were going to present, I thought all of this would go to the city council with our recommendation for number 2. That's,
Yeah,
I think, I actually think that the options that were considered by the commission do need to be reviewed with the city council,
okay,
with the rationale for the decision to support the recommendation you're making.
okay.
I think
That's the
that
process.
does
That's
need
what-
to occur
yeah.
with the council.
That was my original thought anyway.
Yeah,
So,
I
okay.
do believe that would be most appropriate.
Now we'll present a shorter version of this presentation.
We
I don't think city council would appreciate an hour of discussion.
probably not, but,
They might.
I think we can pass the information on to them.
Correct.
And only review a portion of it.
correct.
Yeah.
The information that was presented tonight for Water Commission could be presented to them in advance for them to review, and perhaps a synopsis of what support, what was discussed, the recommendation, and the support behind that recommendation
Okay.
could also be presented in advance so that they have time to review it prior to the meeting.
Okay. Okay. Any other discussion? So, okay, we have a motion and a second to present to city council option 2 for water rate increases. All in favor? Say aye.
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 Opposed? Motion carries unanimously. Thank y'all. Thank you, everyone, for the work done and these questions. Really appreciate everything in the background that everybody helped, especially finance. Can't thank her enough. Moving on to business item number 4, ordinance 210. We have an opening on the Water Commission, place 2, vacancy expiring September 30th, 2021. And we have, I believe, 2 candidates here. Is that correct? Mr. French and Mr. Carmichael? Would you come, would you, both of y'all step up forward? So we're, I'd like to do, what I'm going to ask you. Yeah. So we get that on. I'd like to ask you one at a time to introduce yourself, give a little about yourself. We got your resumes. And then afterwards, I'll turn over to the commission to ask questions to both of you at the same time. That way, you both get a chance to answer the same question at the same time. So go ahead and start, Mr. Carmichael.
Please. Okay, good evening. My name's Richard Carmichael. I have a bachelor's in structural engineering, a master's in civil engineering, a doctorate in civil engineering, 50 years of experience in engineering in the areas of water supply, service impoundments, and groundwater, water treatment, wastewater treatment, and a history of volunteering in my community and elsewhere. I volunteered at state parks. I volunteered as a Texas master naturalist at various locations, and I see an opportunity here to maybe, I hope to volunteer with the city of Garden Ridge and make use, I hope, of some of the education that the U.S. Air Force paid for over the years. So, thank you.
I'm done. Thank you very much. Appreciate it.
No. All right, please introduce yourself, Mr. French.
My name's Ken French. I just moved here to the city about 8 or 9 months ago. Saw my resume. Spent 35 years in sales with Caterpillar equipment. Volunteered a whole bunch of different places. Just looking for an opportunity to get involved with the city, basically.
Okay. Where do we want to start? To my right, Commissioner Heisenberg, you have any questions? I'll let you start first.
Well, I'm just going to say I'm very happy that you're still standing here after that last discussion. You haven't run out the door.
I considered option 1. There's a big cop was over there.
Yeah. I'm not sure at this time that I have a question. I'm going to defer to that, and I'll think about it a little bit.
I just want to say thank you both, as Commissioner Harshberger said, for sitting through some of our meaty discussion. And thank you both for wanting to give your services and your time to the city of Garden Ridge. Your resume say it all. You know, I don't really have any I don't really have any questions at this time. So thank you very much once again.
You went through this process not too long ago, so.
I know.
And all your questions, you probably have the same questions, you thought about from then, huh?
Well, I do have a question, actually, and thank both y'all for being here and bearing through a little bit of a long meeting. But I do have one question. So there's obviously been a lot of attention on the Water Commission, and if you were at any of the meetings or heard about any of the meetings, it's kind of lively recently. So I'm really glad that you still decided to put in your resumes, but was there anything specific that drew you here? Was this the latest water issues that came up? Is that the reason why you wanted to go ahead and apply for this? Or were you aware of all the stuff going on? And why didn't that scare you away?
No, yes, excuse me. Yes, I'm aware of the issues. I've been reading the newsletter and the newspaper articles. I've seen that. I have a lot of experience in water, wastewater, water treatment, water development. And so I thought that perhaps this would be an area where I could volunteer with the city, where I could maybe add the most. So that's basically why I decided to come forward, and decided sitting at home isn't much fun. So it's a lot better to be here. So, thank you.
Yes, I'm aware, and I saw the city council meetings. I saw the city council meetings on TV, and that didn't look like that was a lot of fun for the mayor. But, yeah, and I just wanted to get involved in something. And when I filled out my volunteer form, I said, look, put me in wherever you guys need me to be, and there was an opening here, and so I'm here. And I had a short discussion with, was encouraged to send in my application.
Thank you.
Well, him and my wife, so.
You too?
Yeah.
Yeah.
Get out of the
Yeah,
house.
I need you to go do something.
Yes,
Yeah.
yeah. You're retired now.
I go back to Commissioner Harrisburg.
Yeah, so one question that they always ask volunteers is, so since it is a volunteer position, how is your time availability for participating both in our monthly meetings, but also in various study committees and things like that? How do you think you'd be able to fit in with your schedule?
Oh, my
We'll
schedule.
rotate the,
I volunteer at my church. I play music at my church. I go to rehearsal on Thursday nights. I love to play golf. You know, I mean, there's a lot of other things. I got 3 grandkids in Austin, but I'm retired, and so I make time for the things that I make my commitments to. That's, I mean, if you don't have time for it, don't say you're going to do it. So I plan accordingly. It's in my phone, and my wife and my kids, and they remind me of where I need to be. So.
Yes, I've been retired this time, about 4 years, and my wife kind of said, get out of the house. So I do have a fair amount of free time. I like to schedule my time. I'm a planner, I'm an engineer, so I think I would relish the opportunity to get involved, and I have no issue with giving it all the time that you all might need.
okay. Okay, my turn? Okay, how long y'all both lived here? You said you lived in here 8, 9 months, Mr. French?
Yes.
Mr. Carmichael, how long you lived in Garden Ridge?
Since June.
Since June, is that 3
This year.
months?
Yeah, we moved
Okay.
here March of this year.
Okay. So,
From Houston.
have y'all had a chance to attend other city council meetings since y'all been here, since y'all moved to the city? Any other commission meetings? Have y'all had time to do that, or just,
No,
Does it-
no.
no?
Been pretty busy, actually, for being retired. So
I
it's
understand, I
trying to
understand.
find, yes, finding time to do those things, but no, I have not.
Okay,
No, and I have not either.
Okay,
We've
so
been
both y'all the same there.
Remodeling our house and trying to find my irrigation leak and a few thousand other things that, floors and windows,
yeah.
kitchens and bathrooms.
Okay, the other question that's a qualification office is, are you, both of y'all registered voters in Garden Ridge, Comal County? Are you registered voter?
Absolutely, yes.
Okay, Yeah, okay, both, yes on that, okay. I'll give you some feedback. Normally, we might move up the interview process to before everything we discuss business, but I really wanted to see how y'all survived the discussion. So, I mean, so one thing I have at this point, I normally ask a question, but since we had an issue that already discussed, if you were the odd man out, person out, and voted no against something, well, and it got approved, like, 3-1, for example, could you stand there and support the decision made by the commission? Mr. Carmichael?
Absolutely.
Okay,
As a career Air Force officer, when the commander makes the decision, you fall in line.
fine, whether you
So-
agree or not.
Absolutely.
That's, Mr. French?
Well, I think you do the best you can to choke down the information that you've got and come up with the most educated decision that you can and support the best decision, even though it may not be the most popular decision, You do the, I mean, that's a 5-pound peanut butter sandwich, y'all, just for an hour's worth of, information. So you do the best that you can with what you got.
And that's what we asked, that, no matter how the vote goes, we need everybody to push ahead and support the decision made. It's critical that we present the common front out there. That's really all the questions I have. Any other discussions from my fellow commissioners?
I'll throw in one other, just because I'm curious, and after your line of thought there. So first of all, Dr. Carmichael, I'm very impressed by your background. So my question is not to put your background down at all, but I would ask Mr. French. We actually have quite a few people up here that have technical backgrounds, but part of our job is to provide oversight to the management of the water company. So how do you think you can bring your background to bear in answering some of those questions about issues with managing the water company? Not just the financial stuff that we talked about, but looking at training and operations and all the other stuff that is involved.
I spent 35 years in the not the military, but Caterpillar, and it was all training and all forecasting and what do you do? And when you don't do well, how can you do better? And where do you identify your strengths? And how do you identify your weaknesses? And all those sort of things like that. So, and I gave hundreds of presentations to city councils and water districts and pumping stations all through the Rio Grande Valley, all that sort of thing. So the questions come up, they're different every week. And it's like, so what are you looking for? And how do you clarify, did I answer your question? And did I not answer your question? And where are we lacking in those information? And I think it's important to know when you don't know. And just go, I don't know, let me go find out. How much time do you give me to find out? Let me go see what I can dig up, like the commercial water rates. I mean, I don't know what the answer. I'd never heard there was that sort of information available. It's like, where do you go find it? But you do the best you can, and you ask for clarification when you don't know. That's my school teacher background. I did 3 years of that also.
So in the interest of fairness, then I'll ask Dr. Carmichael to basically answer the same question, but of course you come at it from a different perspective. So how would you bring your background to bear on those management issues?
I've had a lot of experience in managing. I managed the municipal solid waste permit section for the state of Texas, issuing permits to landfills, and had a lot of experience because I actually talked the agency into allowing me to hire licensed registered engineers and geologists who tend to be a very independent group of people with their own professional opinions. And so, yes, it's challenging, and you need to bring people on board. You need to convince them of the way to go. And I've done quite a bit of training in my career as well. I was a certified industrial hygienist, which is a safety occupation. Did a lot of training in safety in OSHA and getting people on board to buy into what we're doing and why. You have to rationalize and you have to explain why. But dealing with engineers and geologists and other professionals is certainly an interesting and challenging task.
Thank you, sir.
So I just wanted to say earlier, I made a comment. I said your resumes tell it all. I want to first of all say that in no way says that experience, or the technical background is higher weight than the other, especially not in my boat, because I'm a guy without a technical background.
I'd have hugged him about an hour and a half ago. Oh, yeah, I know him.
But you bring some valuable experience as well, sir. 35 years of leadership and management, and we definitely see that. We see that in your resume for sure. What this comes down to, I've been on the commission for about 3 years now, is are you available and willing? Anybody who volunteers their time, you both know that it's going to take just a little bit more than you might have expected. You think it's going to be just a Tuesday night, the fourth Tuesday night, but it's going to be more than that. You know, there's going to be some times where you might come to get an education from our water manager, or a time when the city manager or the mayor needs to talk to us, or city administrator or the mayor needs to talk to us. So availability and willingness, you know, is what it's going to come down to. And, you know, may the best man win tonight, or the best, you know. Yeah, all right? So thank you guys once again.
Okay. We have two great candidates, two obviously various backgrounds. We need diversity in this commission. So we don't want all one type of background. We need different backgrounds. So I'd like to consider that as one of the decisions. We have fairly new residents to Garden, which is great that you want to get involved so fast. 9 months and 3 or 4 months. I'm gonna leave it up to one of the three of y'all to bring up.
Well,
How you'll proceed?
question for you, I guess, is on the ordinance requirements. Are we equally meeting them?
Okay, so I'll bring that up now. The ordinance 210, qualification for office says reside in the city for at least 6 months. But we do have the option to request the council to waive that. So we can't, it's an option that we can waive as part of the motion. So we will have to include that in the motion, though. Any other questions on that? Go ahead.
So I'm going to go ahead and be the one to throw it out there, you know, what I'm thinking. Like you both already, but the thing that stands out for me is that Dr. Carmichael, you only requested the Water Commission. All right, that's the thing that stands out to me, and that's the thing that I kind of weigh and I'm going with tonight, because both of you guys are very impressive. And, you know, Mr. French, I would say this, there are, you want to get involved, but there are so many more opportunities in Garden Ridge to get involved, you know what I mean? So. Yeah, so that's the one that sticks out to me. So with that being said, that's my recommendation.
So you want to make a motion?
Oh, we're going to make a motion on? Okay.
You have to make a motion.
Oh, okay.
That we recommend.
All right, so I make a motion to recommend to City Council Dr. Carmichael for our vacant position. How's that sound?
Could I ask you to also include that we ask to City Council to waive the 6 months residency?
Okay, so I make a motion that we recommend to City Council Dr. Carmichael for our vacant position, and the fact that we waive the 6 month resident requirement. How's that sound?
Is that properly stated? Okay. Do I have a second?
I'll second.
Before I do, I just want to encourage, remind everybody the council makes the decision regardless of what we
Correct.
recommend.
That's
And
right.
that I would hope that both stay involved in some way, because as you've seen, we have frequent openings in all our commissions. With that said, I will second the motion
Okay.
to recommend Dr. Carmichael and waiver of the resident requirement.
Okay. Any other further discussion? Okay. We have a motion and a second to recommend to City Council Dr. Carmichaal for the open position and requesting City Council waive the 6 month residency requirement. Do I have all in favor, say aye?
Aye.
Opposed? Motion carries. It's like I said, so at next City Council, I will present the recommendation, and then City Council will have to approve that recommendation as well. Okay, thank you for both your time, and Mr. French, I'd like to encourage you to stay. I know that. So, I know we have other openings, is that, we have other openings on other commissions at this time?
We have an opening on Quarry Commission.
We just filled the wildlife yesterday, or
We filled Wildlife.
we recommend it,
We don't have an opening on PNC, so right now,
so
this would
Quarry.
just be Quarry
Quarry
Commission.
position, Quarry. And when is our next meeting?
They don't, technically, they're supposed to meet in November, but I think that will probably not happen until
Till
January.
So stay tuned, there'll be, somebody be in contact with you. Thank you. Do we have any other discussions or concerning ordinance 210? Anything else that we need to talk about? Okay. Future agenda items. So we have on the, I know we had a couple of things that we brought up last time for future. I know sometime we need to have us either at the next regular meeting or have a special meeting to discuss leak adjustments. I know Mr. Parsons has a lot of opportunities there for us to talk about. So we'll decide when we can do that. Where's the other? Hold on. One was mailed out. At some point, we have on the list for future educational classes for water conservation. That's probably be a good time for the spring, I would think. We hold all that off for a while. There's also a request that was presented last time to some sort of rate adjustment in case of landscaping requirements, so we'll waive that till, again, the spring. And then review drought management plan at some point. Is there any other items that commissioners would like to put on an agenda?
So I'd like to go ahead and recommend that we talk and finalize. I know at the last meeting that I was at, we were talking about conservation tips we wanted to include into the customer pamphlet brochure.
Oh, yes, yes. Mhm.
So I'd love to go ahead and talk about that so we can finalize that document and present it to city council.
Okay. Anything else? Okay. Our next regular scheduled meeting was scheduled for Tuesday prior to Thanksgiving, November 26. I'm requesting that we move that to the Tuesday before, the week earlier, the third week. I think the city's open to that. There's no issue at this point. Any issues with the other commissioners to attending that meeting if we move it up a week? Same thing for December. December falls on Christmas Eve, so we want to move that one as well up 1 week. Now, like I said, we may need to make some other adjustments or schedule adjustments if we need to make a special meeting, if we want to do the leak adjustments a separate meeting by itself. And I'll work with city administrator and Kat and Denise to figure that out, and Jacob, of course, to see when we get ready for that. When do you think we'll be ready for something?
It really depends on how many you think we can get through. I've got several that are in the docket, ready to go, so.
Is that something we
I'd
want to
say
try to do sooner than later?
Yeah, I mean, we're ready to go and get some of these out of the way. Sometimes it just takes a while to trudge through all the data and to look, and I know that there are some customers that are interested in coming up and presenting their case.
Okay.
And so it's something that it's gonna take some time, but we're ready to go as soon as we have an opportunity.
Should I ask Nancy or to maybe look at possible option dates that we could propose to the council, to the commission?
Sure,
what do you
I'll
wanna do?
I'll work with Denise and Kat and see if we can't come up with some some options for a special meeting. And I'll work with Jacob and see how many leak adjustments that are ready to be heard, how many we have, how many we think we can fit into one meeting, with a reasonable time limit. And we'll go from there. But we will be in contact, of course, with the chair first about the date, and then we will be in contact with the commissioners to confirm your availability.
Now, for a special meeting, the requirement for quorum is different, correct?
Correct.
So,
You need to have at least one more for the special.
one more, so
So
it'll
we
help
will-
if we move it to after city council, for sure.
Most likely, it will not occur until after city
Okay.
council
So that way, we'll
anyway.
at least have one or two people that might be available then by then.
Right. But we
and crew.
do need more members present for a
Yeah.
special.
So right now, we met the quorum, but we need another, for that. we need a
Another
special-
body, yes.
Another body, okay. Thank you.
Yes, you're welcome.
Moving on, this is a second citizen comment period. This time limited to 2 minutes. What,
I'm sorry, are you guys going to make a motion to reschedule those two
Oh, do we
meetings?
need to make a motion for that? Okay.
Yes, we need a
Okay.
motion made.
okay, so I need a motion to reschedule both the November meeting. Do we need separate motions, or one can do both?
You may combine them if you would like.
Yes. Okay, so I need a motion to move the November and December meetings a week earlier.
So moved. Move that we move the November regular scheduled meeting up 1 week and the December regular scheduled meeting up 1 week to the
So-
prior Tuesday.
Second.
Okay, so I have a motion and a second to move the November 26th meeting to Tuesday, November 19th, and the December 24th meeting to Tuesday, December 17th. Any other discussion? No? All in favor?
Aye.
Opposed? Motion carries. Thank you. Keep me straight. Okay, now am I ready to move on? Okay, now we move on to the second citizen comment period. This time we're limited to 2 minutes, and you cannot talk about anything that you talked about the first time.
Can I just ask you questions? I just,
I don't know, can't,
here, I feel like
I'll, Nancy, is that okay?
No, they're not.
Okay.
They're clarification questions.
Okay.
So 2 questions. You had said several times that we're pulling out the water department to be standing alone, but on the city general fund, the revenue for the water department is still there. Is that going to also move over? Because in 2019 and 2020, you have the revenue for the water under the general fund, which really should be over on the standalone budget. So that is one big concern I have. And then the other one, I believe you asked it, but I couldn't hear the answer, is when you talk about the tiers, low, medium, and high, I never heard percentage-wise, like population, like 50% of our people fall in low tier, medium tier, or high tier. Like, I just wanted to know if you even know that. I know you said you didn't have people, that you had bills. Maybe if you can just give a random percentage, you know, like 30% falls in the first category, something to that effect. That's it. Thank you.
Thank you. Again, we can't answer at this point, but we can't answer you at this point, but we can talk about it after the meeting,
Okay.
okay?
And then about the revenue, is that your question, or is that still? I'll talk to you. Okay.
Any other citizens like to make a comment? Okay, so at this time, we'll close the second citizen comment period. I'm ready for an adjournment, correctly? Have I missed anything? Kat or Denise, have I missed anything? Are we ready for adjournment?
Oh, no, go ahead, sir.
Okay, I'm just asking to see if I missed anything. Okay, do I have a motion to adjourn?
Motion to adjourn.
Second.
All in favor?
Aye.
Meeting adjourned at 7:50.